Hello, hello, and welcome to another informative session in our tax series. Today, we're going to be getting into the importance of claiming adult children on your taxes. So, whether you're a business owner or an individual taxpayer, understanding it can lead to potential tax benefits and, of course, savings. But before we get into our lovely topic today of claiming adult children on taxes, let me introduce myself. So, my name is Shane Harris, and around here on these social media streets, I'm also referred to as Shane the Negotiator, and I help coaches, consultants, and service providers who are overwhelmed and lack guidance to achieve true financial freedom. And I do that by providing expert tax and coaching services. So that is what I do. That is who I help. So, who qualifies as a dependent? So, to claim an adult child as a dependent, they must meet certain criteria set by the IRS. This include age limit, residency requirements, and financial support considerations. So, generally, the child must be under 24 if they're a full-time student or under 19. Otherwise, and they must live with you for more than half of the year. So I know you saying child, I know your kid, your adult kid between 19 and 24, you say child, they're going to likely be upset. But for this particular purposes, these are the words of the IRS. So generally the child must be under 24 if they're a full-time student or under 19 otherwise, and they must live with you for more than half the year. So even if they go away to school and they do come back at some point in time, they have to live with you, considered living with you for more than half of the year. So let's talk about financial support and benefits. So you have to provide more than half of your adult children's financial support to claim them as a dependent. This can include costs like housing, food, education, and of course, healthcare. Claiming a dependent can lead to tax benefits like the child tax credit, the earned income tax credit, and education related deductions and credits. So let's talk about a case study real quick. So consider Lisa, who runs a successful consulting firm, and her 22-year-old daughter, who is a full-time college student. She still lives at home. So Lisa pays for her tuition and living expenses, which allows her to claim her daughter as a dependent. This results in additional deductions and credits, reducing her overall tax liability significantly. So let's talk about some education credits. So for parents like Lisa, education credits can be especially beneficial. The American Opportunity Tax Credit, or AOTC, and the Lifetime Learning Credit, LLC, not to be confused with limited liability company, offers significant tax savings for qualified education expenses. So let's go look at some of those credits right now. So, the American Opportunity Tax Credit. So, who is eligible for American Opportunity Credit? And I can share my screen so that you guys can see what it is that I am looking at. So, let's go to here, share my screen. Boom, here we are. So, we have those credits that I just listed. Here it is under Family, Dependency, and Students. And you can go find this directly on the IRS website, irs.gov/credits deductions/individuals. And I'm now under AOTC, American Opportunity Tax Credit. So who's eligible? Again, to be eligible, you must be pursuing a degree or other recognized education credential. You need to be enrolled at least half-time for at least one academic period beginning in the tax year. So if we're talking about for 2023, we're talking about in the beginning of 2023, they needed to been enrolled at least half-time for one academic period beginning in 2023 if we're talking about that particular year. Not have finished the first 4 years of higher education at the beginning of the tax year. So to be eligible for this credit, they need to be within the first 4 years of college. If they have finished the first 4 years of college, then they will not be eligible for this credit. This is postgraduate credit. So this is before they graduate from a 4-year school. If they're within that 4-year period, they can take this credit. Once they have graduated and moved on to a higher education, like they're going for their master's or their doctorate, then this credit will not apply to them. And we'll talk about which credit will apply for them to them in a second. They not have claimed the American Opportunity Credit or the former Hope Credit for more than 4 years. So this was formerly called a Hope Credit. I know back in the day when I was in school, I received this credit and it was called a Hope Credit back then. So some of you around my age, and you might have claimed a Hope Credit back then also, which is now called AOTC, American Opportunity Tax Credit. So if you have taken this credit for 4 years in a row, on the 5th year, even if you are still considered undergraduate, you're still within your first 4 years because you still had to repeat a class or you have to do some other things, you didn't quite graduate yet. On year 5, you cannot take this credit because you can only receive it for 4 years within that period. You cannot have a felony drug conviction at the end of the tax year. If at any point during the tax year, at the end of the year, you have a felony drug conviction, then you are not going to be able to take this credit. So stay out of trouble, guys, okay? So let's talk about the academic period. The academic period can be semesters, trimesters, quarters, or any other period of study such as summer school sessions. The school determines the academic period. So even if you're like, well, I went for 1 semester, but the school's record saying that you went for less than a semester, it's whatever the school has, that is what's going to be, that's going to be the final word. So for schools that use clock or credit hours and do not have academic terms, the payment method may be treated as an academic period. So there are some online schools that have credit hours and they have like clock hours, like certain like amount of hours of schooling, 20 hours, 60 hours, whatever. Then that particular case, the payment period may be treated as the academic period. So whatever payments that you made and within that particular period will be used. And again, the school determines this. So to be eligible to take this credit, the law requires the taxpayer or the dependent to have received a 1098-T, that is the tuition statement from an eligible educational institute, whether it's domestic or if it's overseas somewhere. So when generally the student received the form 1098-T tuition statement from their school by January 31st of that particular year. So we're not quite there yet. We have another week and a half, and then about a few more days, and then we're going to be January 31st. So you should have received it by then. If not, it'll probably be in the mail, and you probably get it sometime within the first week of February. However, reach out to the school if you have not received it yet, or your child haven't received it yet. Reach out to the school to find out what's going on with that, because you should not file your tax returns without this if you're planning on taking this credit. Okay, so let's go on. So somewhere it says, be careful claiming the AOTC, American Opportunity Tax Credit. Make sure you are qualified before you're claiming this credit. Make sure to keep copies of all the documents used to find out if you qualify and determine the amount of the credit. Again, it's record keeping. We talk about record keeping so many times. Record keeping is very important because you're going to be needing this for just about anything. So whether you're an individual, whether you're the student, you're the business owner, it's record keeping for everything. The IRS, so let's go down to where, let's see. The IRS may also charge you an accuracy or fraud penalty, or you can be banned from claiming the American Opportunity Tax Credit for 2 to 10 years. So if you take this credit incorrectly, the IRS can impose these penalties, which is called, it can be for inaccuracy, or you will get that fraud penalty and you will not be able to take this credit for 2 to 10 years. And the IRS can determine which one. They can say you can't take it for 3 years. They can say 5 years. They can give you the maximum 10 years. So you don't want to be messing with this. So that's why having accurate records is very important, and hold on to these records for for at least 3 to 5 years or so, and say hold on to it longer than that if possible. So if the AOC, the American Opportunity Credit claim, is disallowed in the previous year, you may need to file Form 8862 before claiming the credit in the future years. So again, these can get into a little bit dicey situations. So you definitely want to reach out to a professional to help you with this. So what are the links? So there's our income limitations that we're going to talk about. So to claim the full credit, your modified adjusted gross income, or MAGI, must be $80,000 or less. If you are married filing jointly, then it's doubled to 160,000 or less. Okay. So if you are within this threshold, you can claim the AOTC credit. If your threshold, your income adjusted gross, your modified adjusted gross income is over this, then you would not be able to take this credit. You cannot claim the credit if your modified adjusted gross income is over 90,000, and if you're filing jointly, 180,000. If it's over that amount, then you cannot take this credit. All right. So that is enough for this credit. Let's go into the lifetime learning credit. So who is eligible for the lifetime learning credit? So to be eligible for the lifetime earning credit, you have to be, of course, the student. So you have to be enrolled or taking courses at an eligible education institute. So both the AOTC and the LLC, again, not to be confused with limited liability company. We're talking about lifetime learning credit here, okay? You have to be enrolled in an education institute. You need to be taking higher education course or courses to get a degree or other recognized education credentials, or to get or improve job skills. So you can be working. You don't have to be necessarily, you have to be in an educational institute, but you can be taking the credits in that school to improve the skills in your job, not necessarily because you're trying to get a degree. Then you can take this credit because it will qualify. You need to be enrolled for at least one academic period beginning in the tax year. So it's the same as the American Opportunity Tax Credit. And again, the academic period can be semesters, trimesters, quarters, etc. And again, the school determines that. So it's the same criteria as American Opportunity Tax Credit for the learning opportunity, for the learning lifetime learning credit when it comes to the academic period. Okay. So what are the income limits? They have income limits here too, and it is the same as for American Opportunity Tax Credit. For the year 2023, the LLC is gradually reduced. So it phased out. So if your MAGI is between 80,000 and 90,000 for single filers, if it's 160,000 and 180,000 if you're filed married jointly, it starts to phase out. So you can't claim the credit if your modified adjusted income, or MAGI, is 90,000 or more, 180,000 or more if you're filing jointly. Okay. To be eligible to claim this of the AOTC or the LLC, the law requires a taxpayer or a dependent to have received the 1099-T. So again, you have to receive that 1099-T, which is the tuition statement, which again, you should receive by January 31st. If you haven't received it yet and you're in February, you may want to reach out to the school. So let's see what it's worth. So the LLC is worth, the amount of the credit is 20% of the first $10,000 of qualified education expenses, or a maximum of $2,000 per return. So the LLC is not refundable. So you can use the credit to pay any taxes that you owe, but you won't receive any of the credit back as a refund. So there's refundable credits and there's non-refundable credits. Refundable credits, you can use it to offset your taxes owed, but you will not get a refund. Refundable credits, even if it offsets your taxes, if there's excess, you will get a refund. This is considered a non-refundable credit. So let's say your taxes owed was $1,500 and you received this credit, you received the $2,000, then you can only offset that $1,500 in taxes that you owe. The additional $500 to make up $2,000 will just be a wash. You will not be able to take it. Only if you had a different type of credit that was refundable would you have gotten that refund for $500. Okay, so I hope this makes sense. So for the lifetime learning credit, let me stop sharing the screen now. The lifetime learning credit is 20% of the first 10,000 and a maximum of 2,000. So you cannot get more than 2,000. So if you had two children on there or so forth, the maximum is $2,000. Okay. And for the American Opportunity Tax Credit, 2,500 is the amount that you would be able to get as a credit. Okay. So one thing I did not mention for the American Opportunity Tax Credit, so you can get a maximum annual credit of 2,500 per eligible student. So you can have multiple students and you can get 2,500 per each eligible students. If the credit brings the amount of the taxes that you owe to zero, so remember as we talked about the lifetime learning credit, you can only get up to a maximum of what refund you owe. So you will not get a refund for the excess. For the American Opportunity Credit, if it brings your taxes owed to zero out your taxes owed, you can have 40% of any remaining amount of the credit up to $1,000 refunded to you. So this would be considered a refundable credit. Remember, I was saying the lifetime learning credit is a non-refundable credit. So if your taxes owe is $1,500 and you got a $2,000 credit, only $1,500 is going to go towards the taxes owed. The remaining $500 you're not going to get back as a refund. For the for the lifetime learning credit, for the American Opportunity Credit, $2,500 is the maximum per eligible student. However, if you zeroed out your taxes owed, so you owed that $1,500 and you paid that $1,500 in taxes, you still have $1,000 that's remaining. You can get, even if it zeroed out your taxes owed, the remaining $1,000, you can get 40% of it up to $1,000 as a refund. So you'll be able to get 40% of that $1,000. So you'll be able to get $400 as a refund to you. The amount of the credit is 100% of the first $2,000 of qualifying education and expenses you paid each eligible student, and 25% of the next 2,000 of qualified education expenses you paid for the student. So first is qualified education expenses. That the first 100% of the first 2,000 goes to qualified education expenses that you paid for the student, and after that, 25% of the next 2,000 of qualified education expenses that you paid for that student. All right, so I hope that makes some sense for you guys. All right, so claiming an adult child can impact your filing status. In some cases, it might qualify you for the head of household status, offering more favorable tax rates and, of course, a higher standard deduction. As we spoke on the last series, on the last, not series, but the last session, we did speak about head of household status. If you have not caught that, you want to go back to the 2024's playlist and catch the session on head of household. Okay, so common mistakes we're going to talk about. So common mistakes is not understanding the full criteria or overlooking potential tax credits. It's important to keep accurate financial records for substantiating the support provided. So for anything that is going on your tax return, you want to have evidence of that somewhere. You want to hold on to it in a nice folder, keep it on a digital folder, or if you're still using folders at home, you want to have it in a secure place and keep records of everything that you are going to be placing on your tax return. If you're taking credits or you're taking deductions, you want to have the proof to show that you can take that credit and you can receive that credit and that you can take that deduction should you get audited. Okay. So let's do another case study. We have Michael, a freelance photographer. So he supports his 20-year-old son who's not in college. Initially, Michael didn't consider claiming him as a dependent. So after consulting with a tax professional, yours truly, he realized that he was eligible for additional tax benefits, which helped lower his overall tax burden. So again, as I mentioned so many times, when you guys are doing your own taxes because you think I have a simple tax return, I didn't make that much money. You never know what you're eligible for. Some of you may have been doing it a while and you have gotten professional assistance every now and then you go back doing your own taxes and you may be a little bit better off than someone who never spoke to a professional. However, the tax law changes constantly. It changes every year. Is something new added in, something is taken out, there's things phasing out and so forth. So you want to get with a professional when you're doing your taxes. If you have a W-2 and you are you have one job with one W-2 and you're a single person, you can probably file your taxes by yourself. You're making like 50,000, maybe even 100,000. You want to file your own taxes yourself, then by all means go have at it. But if you are making 300,000, 400,000, 500,000, even as an employee and you're by yourself, you may want to consult with a tax professional because it might be some tax planning that you may need to do to reduce your taxes because you're going to be paying additional Medicare taxes and things like that. And it may be some tips that they can give to you to help bring your taxable income down so that you're not paying so much in taxes. So there's some people who can do a simple tax return. You can go on the IRS website and file it for free because it's just that simple. But if the people who are watching me, you are likely business owners, I do not suggest you file your own taxes if you're a business owner, especially if you have dependents, you have multiple businesses, you have investments, all these things. When you start adding in all of these things in there, you definitely want to get with a professional because I'm guaranteeing you are leaving money out on the table. Okay. So let's wrap this on up. So understanding the rules for claiming adult children as dependent can open up significant tax advantages. So it's definitely worth exploring this option if you're providing substantial support to your adult children. So I know in the United States, once your child meets 18, we're like, oh, you're an adult, go on out there and do adult things. However, in my eyes, an 18-year-old is not an adult. They're still a child. They still need guidance. And when it comes to the eyes of the law and for tax purposes, they're considered an adult, but they're your adult children, and you can still take care of them on your taxes and get a little something back for them, okay? So some teasers. In our next video, we'll tackle essential tax documentations, a comprehensive checklist. So this guide will be invaluable for organizing and preparing for your tax filing, especially for business owners. So you definitely do not want to miss this because I'm definitely going to go into a checklist. I'm going to have a checklist for you guys, and I'm going to give you run down the types of documentation that you're going to need to provide, any things that you're going to need to have with you to get you through tax season and moving forward, some of the documentation that you're going to need to continue to keep track of. Okay. So that is going to be on our next session. So in closing, thank you so much for joining us today. If this information was helpful to you, and I'm pretty sure if you stayed and you've watched it all this up until this point, it has been helpful to you, please like, share, and subscribe to my YouTube channel. Stay informed and maximize your tax benefits. And here is my link in case you need to reach out to me for any assistance on anything that we spoke about today, or even if you go back and you saw some of my previous content, you definitely want to reach out to me to assist you. Here is the link, bit.ly/SD negotiator, and I'll be able to assist you. Click on the 15-minute discovery. If it's just a matter of us just sitting on there, you telling me what you need, I can tell you if I can help you. Click that 15-minute discovery. If you have more in-depth questions that you need answered, then of course you would click on that 30-minute consultation for an investment where I can sit down and walk you through and give you some real answers there. So again, thank you for joining in. And until I come back with the next tip or the next topic, which would be that checklist for the guide to organizing and preparing for tax filing, I will see you next time. And